Sam Bankman-Fried's extradition to the US has finally been approved. It's been a few days in the making. We had a very weird saga of events with him appearing in court and then extradition being delayed and then him not appearing in court yesterday. But it is finally official. He appeared in court and we did get his extradition to the United States approved. So officially, SBF is now headed back to the US to face criminal charges over the collapse of FTX after a judge approved his extradition from the Bahamas. Bankman-Fried, who has been jailed since his arrest last week, agreed not to contest his extradition, the Wall Street Journal said. US authorities have charged Bankman-Fried with several crimes, accusing him of committing or conspiring to commit fraud on FTX's customers and lenders, money laundering, and conspiracy to defraud the US and violate campaign finance disclosure laws. So in today's show, we're going to go over his extradition, what this means, what may be the next course of events for the SBF saga, and also talk about one very strange request that he is made with his extradition to the US. And of course, at the end, we are going to do a crypto market update where I go through 3 or 4 of the biggest narratives to look out for in Q1 2023 as we head in the new year. So make sure you smash the like button. And if you're not subscribed, subscribe to the channel because I post every single day. If you guys wondering where Ran is, he is on holiday right now. He's taking some time off. So myself and Hustle, and I'm sure at some point Carl and Sheldon will be holding the fort down. But Ran did say if there's big news that breaks, he'll come on and cover it with me. So just for those asking where Ran is at the moment, there is big news to talk about. So essentially what happened was after less than a week, Bankman-Fried appeared in court on Monday. And if you watch my stream, you'd know that what happened was he went to court, but his extradition didn't take place when we expected it to take place because his lawyers demanded more documents from the court. And it was quite weird because he ended up being sent home from court on Monday or back to Fox Hill instead of getting his extradition approved for the Tuesday. And then on the Tuesday, the next day, his lawyer went to court and filed the papers on his behalf, but it still wasn't officially approved until today when he had his court hearing and he was approved to head over to New York. Now, there is speculation that he could potentially be facing court in New York tomorrow and arrive as early as Wednesday afternoon, where he'd be arraigned in the New York Federal District Court in Manhattan. And we did get this prediction confirmed by the Bahamas, as they said that they have officially announced the extradition of the United States of Sam Bankman-Fried, the former CEO of FTX. SBF will depart from the Bahamas for the United States tonight. So it looks like that SBF right now, as we speak, is potentially on a plane. And we could see First Squawk reporting that SBF is at the prison of the Bahamas and will be taken to the airport at 6 p.m. 6 p.m. was about an hour ago. So like in all likelihood, he's either boarding the plane now or prepping to board the plane, or maybe he's even in the air, but he is on the way as we speak. In the process of going to New York, where he obviously has to face court in New York. And all this happened off the back of a diplomatic note that the United States sent to the Bahamas after they filed criminal charges against SBF so he can actually be heard and trialed in America, because obviously FTX US and FTX affected a lot of US customers, and it's been a big topic of debate in the US in Congress. We've heard all the hearings, and it's just been a very public event. The US obviously wants to trial SBF in the US and doesn't want his justice to be served in the Bahamas, which makes complete sense. Now, SBF now going to New York is facing some huge felonies. He's actually facing 8 in total: conspiracy to commit wire fraud, conspiracy to commit securities fraud, money laundering, and a few more minor felonies as well, which could see him land in jail for between 85 to 115 years if you add up the sentences for each of the charges individually. Now, there's been much speculation as to how long he could land in jail. I've given it my best guess before, like anywhere between 30 and 50 years to me would make sense, but it is all speculation at the moment because there's going to be a lot more information over the next couple of weeks that actually comes out about this case, what really went down. Potentially, could he provide information that leads to someone else's arrest? Does he try and barter to get his sentence down? Does the US go quite aggressive, which I think they will, and really try and make a point of this and slap him with a huge penalty? We're going to have to wait and see. Now, I'm actually surprised that he agreed to be extradited from the US, considering just how cozy his conditions in Fox Hill were. So Bloomberg did an article, and I'll just read an excerpt from the article. They said, his life there has been about as good as it gets at Fox Hill in the Bahamas. Not quite the club-fed accommodations favored by white-collar offenders in the US, but nothing like the overcrowded cells many others must endure. unlike those prisoners, Bankman-Fried has been held in the sick bay. He's had access to running water, even a toilet, among other perks. He spent his days watching TV news and reading articles about himself, according to prison officials who spoke on the condition of anonymity. Apparently, they even wished him Merry Christmas when he left, and he was getting fed vegan food every single day. So I'm surprised that SBF would even want to leave the Bahamas in the first place if he's getting the special treatment. But there is one kind of factor here that I think plays into all of this and explains the reason why he was so keen to get extradition to the US. And it's the potential that he is released on bail set preconditions. So essentially, two sources confirmed to Fox News that he's expected to be released on bail per preconditions on his lawyer that they made with the Southern District of New York prosecutors in exchange for agreeing to the extradition. So this means that potentially he could be released on bail. Now, this is crazy because obviously he was denied bail in the Bahamas because he's a flight risk, but there are previous cases like the Bernie Madoff case that we can use to kind of work out maybe what a Sam Bankman-Fried bail would look like while the trial is occurring. Because you got to remember, this trial is going to take a long time. So obviously he's well in the camp, SBF, of receiving bail, obviously. So the Bernie Madoff case, if we look through it, he was released on bail for a $10 million personal recognizance bond. I mean, SBF says he's down to his last $100,000, but all reports are that the family actually owns quite a lot of property in the Bahamas, so I don't think they're badly positioned. That he obviously surrendered his passport. This is Bernie Madoff. Other than that, he was confined to home detention in his Manhattan apartment 24 hours a day, so he couldn't leave his apartment with an electric monitoring device. And this is kind of what is speculated that could potentially see conditions that Sam Bankman-Fried is granted once he arrives in New York. So the two major considerations that the federal bail law has to take into account is, A, is Sam Bankman-Fried a flight risk? I think they would answer yes. So like a full unrestricted bail is extremely unlikely. 2, is he a danger to the public? I would say in some ways yes, but he's not in danger to the public like the same way a serial killer or like a mass drug dealer is in danger to the public. Like obviously it's financial crimes, but the crimes he committed likely wouldn't be considered as dangerous as some of the other people that we've seen get similar conditions. So I would see that I would kind of expect that the flight risk element is the major element for the federal bail law in the US to take under account, which means that there's a high likelihood that he is considered for like an ankle monitor and home imprisonment. I think that could definitely be a scenario that takes place with obviously a hefty bail fee like in the multi-million-dollar range. So federal bail rules have not been liberalized like the new ones in the New York state. It's hard to believe that the US prosecutors have agreed to bail terms, as is being reported. So there's kind of conflicting reports whether he has or hasn't agreed to preconditions. And the judge, who's a former federal prosecutor, doesn't want the embarrassment of Sam skipping bail on her. So expect that if Sam does get bail, it will be under quite strict conditions. But this will be kind of one of the interesting developments in the saga, considering we know how long the trial is going to go for. So whether he doesn't get bail is actually quite an important element here. Now, Ben Armstrong, or BitBoy, as you otherwise know him, said SBF was literally begging his lawyer during the trial on Monday to get him back to the US. Like in the middle of court, he was interrupting, asking his lawyer to get extradited back to the US. So potentially it could explain why SBF was so keen to get extradited, is the fact that maybe he's agreed to preconditions for bail. Obviously, that makes it a little more alluring, at least in the short term, to leave the Bahamas, although we know the conditions he was in the Bahamas were not actually as bad as were first being reported as per the Bloomberg article that we got. This is a very interesting article. Unfortunately, it's behind a paywall, so this is one of the excerpts from the article, but if you do have a Bloomberg subscription, I recommend reading that. It's very interesting. So the SBF saga does continue now that his extradition is official, and of course, I'll keep you updated once any other major news breaks on this front. Now, let's get into a crypto market update, the important stuff, and the alpha for the month of December and also Q1 2023, because the market right now is actually quite stagnant, but we are looking forward to some massive events, which I want to run through and potentially their implications on the market. So before we get into those events, the first thing I want to do is look at the Bitcoin chart. The chart that I gave you guys yesterday pretty much hasn't moved. Bitcoin kind of deciding to operate like a stable coin within this 6% range, which makes sense because we had like a favorable CPI print. Then obviously we had a hawkish undertone from Jerome Powell, an updated dot plot, which implies hikes all the way into potentially May next year, and also like fairly aggressive undertones to what was being said in that Fed statement. So we are at a point where the market's kind of a bit indecisive. CPI is coming down, inflation's coming down, but the Fed's kind of hawkish, so things are kind of stagnant. We got the BOJ news yesterday that Japan was raising its interest rate target, so they're implementing monetary tightening, which is kind of a bit of a pivot away from their more dovish policy that they've been implementing recently. That resulted in a dump, but then also a pump, as Japan announced they were buying back bonds. So if you want to know how that affects the market, I explained that in yesterday's video. But basically just a lot of kind of conflicting macro events at the moment, which means the market is just really indecisive until we get a future catalyst to break out of this range. And you guys know, in terms of trades, the range that I'm playing in terms of short-term trading is the 16.37 range to the 17.329 range. Until we break either side, which is our like big like rent money trades, then we can make small money with kind of the scalp trades from longing the bottom of the range, shorting the top of the range here. I'm not really too interested in playing mid-range at the moment. Like I wouldn't short now, for example, even though we're kind of looking like toppy in the short term, just because like when you kind of do your risk management when it comes to trading, if we continue to push up to this next target, then that would mean you have to kind of set your stop loss at 17.48, which is just too much of a wide stop. Like you basically couldn't use more than 5x leverage on a short trade from here, because your stop loss has to go above the previous highs, and the previous highs are quite far away. So in my opinion, trading, unless it's like very, very, very short term, doesn't make sense in this zone. However, we could see an aggressive move to the upside or the downside, and then obviously that's where the key reaction is going to come from one of these zones, and that's where we can trade long or short. I will come back to the trading discussion at the end and talk to you guys through my exact plan, but I want to talk a little more macro just for the next couple minutes and talk about the general narratives that are propelling this market. So what's his name? Alpha Once Staff did a good thread that kind of outlined some of the major market narratives, and I wanted to highlight three of them in particular that I think are quite pertinent at the moment heading into the year 2023, and specifically Q1 2023. The first one's the Bitcoin unlock from Mt. Gox. Now, this is obviously one that we've heard being rumored for many, many months. I did a thread on this a few months ago as we were getting some buzz that creditors could finally start being paid back their Bitcoin. I have like some extensive thoughts on this that I've shared in that thread. If you search up Mt. Gox Miles Deutscher, it'll come up if you want my kind of full opinion on the Mt. Gox situation. But essentially what we're seeing is that it's highly likely now that we will start to see some of the Bitcoin being unlocked as Grayscale considers a tender offer, so a buyback of its shares and its 633k Bitcoin in locked GBTC. So we're kind of seeing both the Mt. Gox trustee repayments starting to maybe kick into gear in 2023. That's kind of what's being rumored at the moment, as well as Grayscale's tender offer for a buyback of their shares. Now, a tender offer for a buyback of their shares means that some of the Bitcoin could potentially be unlocked for GBTC. We don't know how DCG is going to play this situation out. It's very, very complicated. It does look like now, though, the language is starting to shift a little bit to them accepting an offer for GBTC because they need to raise capital. They've got Genesis, their trading arm, under DCG, which is essentially illiquid, that can't pay out its creditors. So obviously this means they have to raise capital somehow. They've been trying to raise. All reports are that they weren't able to raise enough. So looking at selling off some of the Grayscale fund is one way that they can raise capital for DCG, but it's very messy because DCG owns Genesis alone. So if Genesis goes bankrupt, DCG needs to pay back Genesis. How do they come up with that money, given that Genesis is their main moneymaker? Well, Grayscale seems to be one of the solutions. So that is kind of puts a bit of a headwind on the GBTC trust. Obviously, one of the listed iterations of Bitcoin that you can buy on the market. Because the SEC isn't offering a spot ETF, it's very hard for Grayscale to offer redemption. So they can't actually redeem their Bitcoin for BTC, spot BTC at the moment, which makes things very difficult. So the SEC has certainly added a roadblock to the saga, but they haven't been keen on doing a spot Bitcoin ETF for a while. So right now it's still futures, which means they have to consider their buyback of shares rather than redeeming those Bitcoin. in terms of a spot ETF, which is what they wanted to convert to. So that's the first thing I'd look at is the Bitcoin unlock. So just touching on the Mt. Gox thing for a second, Hal Press said between this, Gox, Bitfinex, ongoing miner selling, and I would even add Grayscale potential headwinds into that list as well. There is around 11 billion of Bitcoin supply expected in 2023 at current levels. Just keep in mind, I think the market cap of Bitcoin right now is like 300 billion or 350 billion. Yeah, 324 billion. So 11 out of 324. It's not a lot, but it still is enough to kind of add some sell pressure onto the market. So approx $2 billion each for Gox, Bitfinex, and Grayscale, and 5.3 billion for miner issuance. Like the miners right now, they're in a tricky situation. I've talked about this with Geordie in the interview that we did on Friday. I highly recommend checking that out, by the way. He dropped so much alpha in that interview, but Geordie kind of explained his issues with the Bitcoin security model. And one of the issues is that it's simply just not feasible right now, given the cost of mining for miners to mine Bitcoin, because when the Bitcoin price goes down, the difficulty is still fairly high for miners to mine. It's very hard for them to break even or turn a profit on Bitcoin. So kind of the expectation is over time, one of the ways this market could capitulate is through miner selling. Because right now we've seen most of the retail selling. We've seen a lot of institutional selling as well through unwinding through all these hedge funds like 3AC and Voyager and obviously now FTX. But we haven't really seen true miner capitulation. But that could potentially be a headwind for Bitcoin in 2023. So if we take the pessimistic approach, the added Bitcoin supply next year from a few potential events is a downside catalyst. And that could be, I guess, in tandem with like a stock market decline, the reason why Bitcoin bottoms in 2023. Once again, I'm not a huge fan of making bottom calls. Very easy to get wrong considering there are just so many factors that can be introduced into this market and change market dynamics from both the buy side and the supply side. But definitely there are headwinds on the supply side. Which we are going to see like exhibited through things like the Mt. Gox unlocks. So Kaduna also says distribution of 141k Bitcoins to former Mt. Gox customers will start in 2023. This will have an impact on the market. You'll have enough time to accumulate for your long-term portfolio. For now, it will be a trader's market, buy the dip, sell the rip. And I was saying this for the last few days as I've kind of tried to outline my strategy for you guys in terms of what I'm DCAing into and also how I'm trading. It's that this is a trader's market. As long as there's volatility, trading is optimal in market conditions where there's significant price movements to the upside and downside. So max pain to me is not actually a dip to 12k. That's not what I view as max pain. I view max pain as a 15k crab market for the next 12 to 24 months. That is max pain because boredom is the worst thing in this market. Boredom is what essentially is going to cause the most issues because you can't trade boredom, but you can trade volatility. So as long as it's a trader's market, we're going to get huge bounces and huge swings, which allow you to short, long, and also take advantage of new narratives, like altcoin narratives that pump when the market gets that quick bounce or quick injection. That gives you a huge opportunity to like get into a project and then obviously sell it and take profits and rotate that back into stables. So the thing is with volatile markets is it's actually not too bad because as long as you have enough liquidity to take advantage of new opportunities as you see fit, then you're in a decent position. You can continue to kind of stack your stables, protect the majority of your capital, and obviously that capital can then be DCA'd back into the market for your more long-term bets that you have conviction in. But you're still keeping things ticking along. So there's something to be said for trading. I'm not necessarily talking leverage trading. That's certainly one way. If you're good at leverage trading, you can do it. I'm more talking trading narratives, trading big events. Now, let's get into a few of the events now, just to kind of give you an idea of how I frame my mindset. Like, for example, a major event would have been the Arbitrum Odyssey, when we spotted that coming to the fray, and then obviously looking into that ecosystem. Another major event that could potentially affect the market is also like the launch of new projects like ZK Sync and some of these like roll-ups that we're seeing come to the fray. And like as they launch, that kind of gives birth to a new wave of narratives that are all built on those protocols. We saw Aptos launch, some of the ecosystem. Like you kind of have to always look forward and look at what is launching, and then kind of try and position your thesis around that instead of always looking at current events. The best traders, they're always future looking. They're always looking at what is next, and they're not looking at what has happened. And I think it's very important in the market that we kind of adopt that mindset because if you do want to take advantage of trading, not only narratives, but leverage trading as well, then you kind of need to be really in touch with the market and future trends. And a lot of that isn't reliant on macro. Some of it is, but a lot of it is really just reliant on your eye and having your ear close enough to the ground to spot these trends and have enough liquidity to take advantage of these trends. So that's kind of how I'm approaching the market at the moment. Obviously, I have my long-term DCA bags, but then I also have liquidity for being able to capture some of the shorter-term narratives that I think are quite compelling and that I think can make me money in the shorter term on that kind of 2 to 3, 4, 5 month time horizon. So another narrative that is pretty strong into 2023 is the Frax halving. Frax is a pretty essential component of the Curve Convex ecosystem, as it's like a major contributor towards the pools. So Frax being like now what I would consider is becoming a fully collateralized stablecoin. It was partial algo. It still is technically, but it's working towards becoming over collateralized in the future. It is now kind of starting to get some attention off the back of their halving. So what they're doing is they're halving emissions as per their yearly emissions halving schedule, which means that the total amount of Frax hitting the market is now halved. So the scarcity factor of Frax, I think, is definitely a bullish thing. Does it rely on macro? Yes, but that is definitely one I keep my eye on. A, what Frax is doing, and B, Curve and Convex, because they're kind of all interlinked, because they provide liquidity to each other. And if you own Frax, VE Frax, they stake that Frax in the Curve pools to earn yield, which they pay back out to holders. So then Frax holders are incentivized to hold. So there are a lot of flywheels in this ecosystem, but Frax is one of them that I think we should look at the moment, just given the fact they continue to ship code and they continue to improve. And now we have more favorable emissions. Another one is Curve USD. Curve USD, once again, in that kind of whole Curve ecosystem, is the new stablecoin that they're launching. Essentially, it is a stablecoin that allows you to kind of mitigate losses based on variable liquidation. So it's a very novel approach to a stablecoin where your positions are almost managed for you over time based on market volatility. Very interesting design. I did do a show on this a couple of weeks ago. If you wanna learn more about exactly how that Curve stablecoin works, but clearly that's a catalyst for Curve itself. We have a few other major launches. I was going to talk about the GMX, GNS synthetics ecosystems today. I think I might do that in another show and do a more comprehensive overview of that. But basically the TLDR is there's a lot happening. GMX is launching its synthetic product, GD, which allows you to essentially provide more liquidity through the GLP, which is going to allow, I guess, more flexibility for people because you can trade synthetic assets, not the spot asset. You can trade like assets that are derived from other assets. So that kind of opens the door up for more capital efficient trading strategies, like protocols like Yamami. Do enjoy using those strategies as well. So we could potentially see like the rise of new vaults, maybe Dopex options vaults through GMX as well. We don't know exactly what we're going to see, but I do think it opens up some more flexibility on the GMX front. Synthetics as well, they're launching their V2. This is one to keep an eye on. And then of course, GNS deploying on Arbitrum is major news because they have been basically Polygon exclusive for quite some time now. But Matic as a network isn't like the greatest network to use. Like it's quite janky. Transactions take a while. Although I'm bullish on Matic from a biz dev standpoint. In fact, I think what they're doing is incredible. And they've also got their ZK EVM next year, Hermes, which is I'm extremely looking forward to that, guys, as a release. As a product right now, Matic's not the best. So in terms of like capturing upside to that huge Arbitrum community Arbitrum's hit its all-time high in TVL this week, transaction volume as well. That's a big plus for GNS. And then also just being on a network that's slightly more usable and doesn't like involve such long bridging times, etc., is quite good as well. So GNS deploying on Arbitrum. I'll actually just look at the price to give you guys a more relevant price update right now. But GNS and GMX, they were very overcrowded trades. I mean, gains was at $4.20, I believe. However, we have started to see a slight pullback. So this is a positive for GNS, but personally, I'm not buying now, but that's personal. Your portfolio, your risk tolerance, your kind of goals are very, very different to mine. And for me, I'm kind of happy with the position I have. I took some profits of $4. It was a very good trade because I managed to get in around $1.50 in September, I want to say. So, it's been a very fruitful trade. So I'm kind of just sitting back and relaxing. By the way, I don't know exactly if I bought in September. It may be in October, but all I know is I got it around like $1.50 to $2 just to kind of clear that up. So yeah, GNS, not buying now, but definitely one to look at as it's launching on Arbitrum. They are a very good team, and they're shipping a lot of cool products. So long term, I do really like the team. Of course, there's very many different opinions about oracles versus order books. That's, I think, got to be a topic for another show. But I think the oracle model definitely has a spot in the overall landscape of dexes in the future. And maybe it's not like the main player, but it can certainly be enough of a player to generate some nice revenue for holders. That's kind of how I view GNS and GMX right now. And yeah, I'll be doing some more trading on GNS in the future on the show, so you'll hear plenty more about it. Once again, that's not a token shill. That's more of a platform update. You guys got to distinguish between a product update that can benefit users through like new strategies and new vaults versus a token update. Because tokens and products, they're two very different things. And I tweeted about this the other day. I said, like, you got to learn to distinguish, and this is the most important skill in crypto, distinguishing projects and the viability of the project and the nous of the team versus the tokenomics and the value accrual of the token in the short term and the medium term. Very, very, very different things. And I think we do need to kind of separate them a little bit. So whenever I speak about a project, it's not necessarily saying buy the token, because they're two different things. And there are also ways to expose yourself to the project side without buying the token. And this is where I think a lot of investors fall short. They kind of think, oh, wow, GNS is launching a thing on Arbitrum. I must buy GNS. It's such a simple way to think about the market. The way that experienced traders and experienced kind of narrative identifiers work in this market is they'll identify a narrative, but they won't just buy that token. They'll think, okay, now what are the potential tokens that are affected by this change? What is the potential change this could have on this specific DeFi ecosystem that could lead to a positive or a negative investment that I can action right now? So oftentimes, like an announcement like DNS and Arbitrum, it's not always bullish for the token itself. It's sometimes bullish for other elements of the ecosystem. Now, whether this be the DeFi protocols that are leveraging the vaults, whether this be a new product that they're shipping that allows you to execute delta neutral strategies, you have to think more about the knock-on effects. And I'm just using GNS as, like, I guess, an arbitrary example to contextualize this. But in general, you need to be thinking about the knock-on effects whenever something happens in crypto, and not just about the token itself. For example, Frax, they're halving emissions. So like a basic person in the market thinks, Frax is halving emissions. This must be bullish for Frax. But you also have to think a bit more widespread and think, okay, now how does Frax actually work? Obviously, the protocol is staking Frax in the curve pools. They're directing emissions back to Frax holders. Okay, so there's that dynamic there. So how does that affect the curve pools? How does a reduction in Frax affect the curve pools? Does that mean more people are now buying Frax to stake in these pools? Does that mean that there's less emissions, so Frax goes up because demand for staking is still the same? Does this mean emissions increase over time on the curve or the convex side? I'm kind of like saying stupid stuff just to kind of give you ideas of questions you can ask, but the logic remains the same. You've got to ask questions and be inquisitive of how things affect other things in the market, and stop thinking about the market like very linearly, which is, I just see a lot of people doing this. Like, GNS is launching Arbitrum, I must buy GNS. It's like very simple. Like, start to branch out a little bit in terms of your thinking and look at like knock-on effects. For example, I'll give you an example that might make more sense to you. FTX, all right? FTX collapsed. Now, when FTX collapsed, the very simple thing to do was short FTT. And if you did that, you made a lot of money, right? For sure, you made a lot of money. But you kind of, when FTX started collapsing and FTT broke that major $22 level, you had to think to yourself, it broke the $22 level. What other tokens in this ecosystem are affected? Like, obviously, FTX isn't the only thing that's affected. It had knock-on effects across the whole market. They held tokens like Solana. They held a lot of Ethereum. They were big investors in a lot of projects across the ecosystem that resulted in wrapped assets like on Ren protocol depegging. So you had to look at the knock-on effects, the forced selling effects, the tokens that they held. And not just think as linearly as FTX is crashing, I'm going to like long BNB and short FTX. You kind of had to think a little more in depth if you wanted to fully maximize that situation and think, okay, Solana, that's quite an associated asset. Maybe this takes a hit. I'm going to open up a short position. That's just an example of like one way to take an event that is like very like stagnant at face value, or kind of isolated at face value is the better way for me to phrase it, and kind of make it more holistic in terms of how things affect the ecosystem. Because crypto doesn't work in isolation, guys. It works, it's an ecosystem. Everything's interlinked. And the macro right now, for example, it's extremely interlinked to crypto. So, for example, if you were invested in crypto earlier in the year, which I'm assuming most of you were, and you saw the pivot starting to come, and you saw like the Fed really starting to tighten up on inflation, that would have been a reason to get out of a lot of the crypto market. So it's not just as simple as crypto itself. There's also like macro things you can look at, like, okay, the Fed's tightening. What does that mean? What does that mean? What assets are most affected? What assets can actually outperform? What assets don't rely on macro? So yeah, anyway, bit of like a long kind of spiel there, but just think it's kind of important to kind of get in the right mindset of how to approach this market, because a lot of people are doing it wrong. And like, really, I just want to help. I just want to help kind of push you guys on the right path. And I've learned so much this year. By no means have I traded this year perfectly. I made mistakes. I was a big investor in Luna. I believed in it. It crashed. I probably was irresponsibly long at times and didn't take enough profits. I've also had some amazing trades this year. But overall, we just keep learning. We take everything as a learning experience, and we get better and better and better. And right now, I would think of this as kind of like, when, I don't know if many of you are into the gym, but when like you're working out and you're into the gym, right? The winter months are for bulking. That's when you really try and put on some muscle. And the winter months are where you grind, but no one notices. No one notices, oh, Mars, you're getting a lot bigger because you've got that hoodie on because it's really cold. But you're actually gaining a lot of gains underneath. You're gaining, and also like you're improving your mind muscle connection every single day. That is the bear market right now. We're in the winter, and we're increasing our gains over time through learning, right? But no one is seeing the results. Not even we're really seeing the results. We're looking in the mirror, we're going, yeah, I'm making improvements, but I can't see it because we have that layer of fat over that's covering like our six packs, even though we're building ab muscles. The bull market is the summer, where things start to, where you actually get a chance to show off those muscles. You've just done a cut, you've lost some weight, the abs are starting to show, you're on the beach, people are saying, wow, like, look at you, you've got a six pack, wow, you're looking so ripped, like, you look amazing, I love your tan, etc. That would have been possible if it weren't for the winter months where you grinded and without any appreciation, even from yourself or others, even though you're making progress, you just couldn't see it. In the summer, when you kind of get that shred on and you're out on the beach, that's where you see those gains. And there's no difference between the bear market and the bull market. There's zero difference in crypto. That's exactly what's happening right now. Like, now's the best time to get those gains. And obviously those gains aren't putting on muscle in crypto's context. Those gains are learning. Those gains are really refining your thesis and really getting involved with learning more about DeFi, learning more about crypto, just becoming an expert, because once the bull market comes, your hard work is now done. And when the bull market comes, you can literally sit back and relax. Like, next bull market, we're not even going to be trading every day. We've done the hard work. Like, we've positioned ourselves. We know the narratives. We know the good teams. We've learned a lot about trading and risk management, and we can just sit back, drink our cocktails on the beach, do live streams from the beach and roll in our profits, but also roll in the newfound knowledge that we learned during the bear market. And we don't have to put in the work then. You actually put in the work now. And it's kind of a shame because even the viewers today, like decent viewers, but like in the bull market, we're probably getting quadruple this because there's a bunch of tourists. And it's kind of a shame to see that this is how the market is viewed. Like, it's like tourism. It's like when it's up, let's just get involved and start getting active. And then when it's down, oh, I'm losing interest, I'm losing money. Like, oh my God. Like, we have to think more long-term than this, guys. So yeah, anyway, another kind of rant. But once again, I think it's important because that's kind of like the mindset I'm using to approach this bear market. And that's why I'm very active every day in my research. I'm working 12 to 15 hours a day researching, meeting projects, being very active with content, because I think it's important now more than ever to like be in this game and be in the right mindset, have your ear to the ground, because I'm learning so much. I don't know about you guys, but I've learned so much this year. And next bull run, we're going to be so much more prepared. And we're going to be so much more well-positioned to not only get financial upside, but also to kind of also educate the newcomers. Because the reality is there's going to be a lot of newcomers that come into this market and they get burnt the same way that a lot of you got burnt last cycle. So yeah, quick update on Fantom before I go through my last trades. Andre's been very active with his FVM updates in terms of the block results we've seen from utilizing the Fantom kind of virtual network versus the EVM. If you guys don't know what's happening, the EVM is very constrained, right? There is a hard cap on the amount of transactions per second and scalability you can achieve through EVM. because it's capped. So any project utilizing the EVM, even if it's even if it's like an EVM chain that has its own consensus, of course they all have their own consensus, but if you're using the EVM, you're very capped. Fantom said, like, okay, we're fast. Like, Fantom was fucking fast last bull run, and it still is now. But they kind of realized we're capped here. We can't grow. We can't get better. We can't push the boundaries whilst we're being limited by EVM. So they identified that as the focal point of what was like restricting them. And they're trying to blow the cap off the bottle right now by coming up with FVM, which is a replacement of the EVM layer, which would mean Fantom operates on its own virtual machine. Now, this is a process that's been undergoing for 2 years. It's going to take a long time, and it's probably why the Fantom price is stagnating, because the market knows this, and there isn't enough bullishness to offset what is happening in the macro environment and like the general crypto environment. So clearly it continues to go down, and it could go a lot lower. I'm not denying that, but they are making some good progress, and we have had some quite optimistic results posted by Andre on the results of the FVM. And we can see that Go Native, which is their kind of new iteration, versus Geth, which is the ETH kind of EVM, I guess, equivalent. We've seen much better results, a much better block finality time versus the other alternatives. And I'm excited to continue to see Andre update us. It's good to have him back. It's very good for the Fantom community to have the regular updates. I feel like Fantom's been a bit out of touch with its community. Having that communication improving is good. Andre, clearly one guy that's tasked himself with doing this. So yeah, he says there's minus 27% in execution steps now. 14x throughput improvement with this. So 14x improvement on throughput. I mean, that's nuts. 14x. So right now it's all about building block space. Right now there's too much block space because there's not enough users. In the long term, more people come back into the market. There's a demand for these chains. There's a demand for these scaling solutions off the back of ETH. Then you're going to need the chains that perform the best are the ones that can handle mass transactions without bottlenecking. This could potentially be good for Fantom. Look, it's a small bet for me. It's one that I'm making next cycle as a potential hedge against ETH. Why do I say hedge against ETH? Because I'm not going to L1 heavy next cycle. After last cycle, after seeing how strongly L1's performed, I kind of am now making a concerted effort to look for new narratives instead of trying to play like the old overcrowded L1 rotation narrative, which means for me, I view the future as like mostly Ethereum dominant, to be honest, with like a few select L2s that help support Ethereum, Matic being one of them, and then maybe Arbitrum or some of the new ones, ZK Sync, etc. And then I think that we're going to have a few niche chains, a few non-Ethereum chains which have their own niches, like maybe Solana's the NFT chain, maybe Fantom's the DeFi chain. Like, we don't know which will be which, but I think that there will be a couple niche chains. So you kind of have to identify the ones that you think have a shot. I think Fantom's got a tiny shot. Will it reach that point in 5 years? Maybe not. In fact, probably not. More than 50% likelihood it doesn't. But like, crypto's a risk-reward game. It's an EV game. It's expected value. If you're making plus EV trades, you're going to make money long-term. And for me, the likelihood that Fantom doesn't end up kind of carving out a niche versus its potential price potential if it does, that's positive EV based on my calculations. So it's worth a bet. Small bet, very small bet. Maybe 2% of my total portfolio, but that's a hedge, right? Because if it succeeds and it ends up carving out a niche, then we can 100x, 200x. But if it doesn't, it's fine. I only lose 2%. So that's kind of how you got to start thinking of this market. Not like, is this project going to work or not? Because the reality is we don't know. Not every project is going to work. I can't tell you with a crystal ball what L1's going to work. You ask every VC, they're going to have a different answer for you. Jordy's interview was very different from Haseeb's interview that I did yesterday. That's coming out tomorrow, by the way. Everyone's got different opinions. It's about working out what chains you think have a shot. And, that's kind of why I have a small bet on Fantom. But obviously, there are more I'll be betting on next year. Solana being one of them. I'm doing some research on NIA. I like some things about it. I don't like some things about it. Obviously, the Atom ecosystem is very interesting. There are definite alternatives here, but it's kind of just about picking the ones you like because we can't own them all. There are literally 100 L1s. If you own 100 L1s, you're going to wreck yourself eventually because you know that there's only going to be 2 or 3 that succeed, right? Maybe that's just my thesis, but if you believe that there's less than 5 L1s that are going to succeed, why bet on 30? It's kind of like just don't stuff your portfolio with all these L1s. Maybe just look into the ones that you think are doing a good job that resonates with your thesis. That just makes the most sense for me. And that's kind of what I'm doing. So quickly on the trading front, before I head off, this is important as well. I'm still in the mindset of shorting ETH, longing Bitcoin. So when I want to short the market, I short ETH. When I want to long the market, I long Bitcoin. The levels remain the same here. The levels are longing at the next test of 16,373 with a stop loss set underneath the previous wick, probably around 16,200. But you can adjust that based on your leverage. Of course, how much leverage you use affects where your stop loss is. If you have more leverage, it needs to be tighter. Less leverage, you can give it a little more breathing room. Then if we push to the upside, then I do expect strong resistance. Unless there's some massive bullish catalyst that comes out. If we kind of get a bit of a pump off not much news, I would definitely short this level and put my stop. Maybe it's 17,650 or maybe a bit low at 17,500 and look for that rejection back down. So definitely two plays here. Remember, if we do hit the top of this zone here, I won't short Bitcoin. I will short ETH at its corresponding level, which is 1,300. And if I do long something, which at the 16,383 level, I'm longing Bitcoin and I'm not longing ETH. That's because ETH dominance is kind of showing a bit of weakness on 4-hourly and the daily. So I prefer to just long Bitcoin, short ETH. Right now, there of course will be a point where this flips and we flip our strategy. But you got to remember, it's all about opportunity cost. You can just short and long Bitcoin, and you can just short and long ETH. But why not long the asset that's outperforming, and why not short the asset that's underperforming? So that's kind of my mentality there. Hope that makes sense. Any trades I do will be on Apex because it's decentralized. So it's non-custodial, so they don't keep your assets in custody like a centralized exchange would. Also, they are powered by ZK rollups, which are an extremely fast way for them to scale. So they have a very good, fast execution on their trades, obviously across multiple chains as well. And they have a massive trade to earn program. Maybe this is the most enticing thing a compelling reason to trade on Apex beyond the benefits of trading on a order book DEX is they're giving away $190,000 a week in banner rewards, millions and millions of dollars a month. And the more you trade, the more you earn. So if you're trading on like another exchange, like why not do a bit of that volume on a DEX, keep custody and control of your assets, but also earn trading rewards. And when you earn banner, you can stake it to earn more. So that's kind of a cool thing about Apex. I'm trading on Apex. For our long-term guys that don't do short-term trading, I am going to update these portfolios soon. I keep saying this, but the reason why I haven't is because I'm just waiting for a better time to reposition. I would love to reposition after a pullback. I may just do it anyway, but if you want to copy my portfolio in the meantime, you can. And this is going to be the portfolio that I position for a long-term DCA. Why did I put Vulcan Forged in there? I put Vulcan Forged in there because it was at a very good buy zone, and I liked it. It did come down, obviously, with the market, but it was in a good buy zone. By the way, the performance, it says it's red, but it's not. It's actually up because I took a lot of profits into stables, which is why I'm 88% in stables now. So if you DCA into this, you're getting mostly stables. You're only getting a few coins. But what that's going to give you access to is my DCAs next time I decide to average in, and you'll get those automatically if you update your nested profile. So by copy trading me, essentially, you're going to get my DCA portfolio over time. I have like a 6 to 12 month time horizon on this, and I'll kind of keep updating it over time for you guys. And I'll keep you updated on every show. So I speak about it at the end of every show because I'm going to keep you guys updated. The ones asking about the giveaway, we will do that. I'm just waiting on Nested to clear the funds. I'll talk to them today or tomorrow, and we'll get that giveaway for you guys. A little bit of a Christmas giveaway for the guys that already copied. If you didn't copy, you could still copy the portfolio, but I've got to stay true to my word and only have the giveaway to the first 105 copiers, which is what I initially said. So hopefully you guys enjoyed the show. Mate, I don't even know. I don't have the mental temperament to answer some of these questions right now. For example, I got an Avalanche question, but like I just know it's a 5-hour answer. I agree, Avalanche has one of the best scaling solutions, but I wouldn't say it's completely solved EVM. Scaling with like just subnets on subnets on subnets on subnets on subnets is one way to do things, but it's also not the most efficient way to capture value, in my opinion. Kind of why I'm not that bullish on AVAX, but I will look into holding some. I don't hold any at the moment, but I will look into holding some just because I do think it's like a novel approach. Although Matic is launching their Supernet soon. I know it's like competing with AVAX, but like Matic also has a lot more traction. So the tech might not be as good in terms of usability right now, but like it's going to be comparable. I wonder who wins. It's going to be interesting. Avalanche, like I get the positives and the negatives, so I can't hate on you for buying AVAX, but I also can't hate on you for not buying it either. When microcaps, bro. So what I prefer to kind of give you more rounded narratives and give you some suggestions of coins to look at instead of giving calls. So yes, 100%. A lot of my time is spent researching small caps, and I do want to share these with you because that's where some of the huge gains are going to be over the next 6 to 12 months. But you also have to keep in mind, if I talk about a $2 million coin, it comes with its risks. One, it probably pumps because I've talked about it. Two, I get called a shiller or an exit liquidity specialist. And I essentially it's kind of like hurts my reputation, even though my intentions are very, very good. Because even if I announce a coin that's a low market cap that I don't even own, no one, obviously most people believe me, but there's always that crowd that just say, I don't believe you, you're dumping on your audience, which couldn't be further from the truth, but you still get accused even if you're not doing it. So it's very hard for me to share small caps. But I think I've figured out a way to do it. I think what I'm going to do is just talk about narratives, look through some suggestions, and kind of hopefully give you guys enough guidance for you to piece it together rather than giving you calls. But, inevitably, small caps are going to tie into these narratives. So, they'll definitely be coming. It's just not going to be that kind of, guys, buy this now kind of call, because I don't want to be that guy. One, I would never dump on my audience, of course. But two, I'd get accused of it either way. That's the problem with sharing small caps, which kind of sucks, but it's just the toxicity of crypto Twitter and crypto YouTube right now. People are just so quick to call you a scammer, irrespective of what your actual actions are. There's almost no way to verify whether you're telling the truth or not, because if I haven't bought, I haven't bought. I can't prove that I haven't bought because I haven't bought. You know what I mean? Unless my entire portfolio was public, but that also comes with security risks as well. So it's kind of like a lose-lose. So yeah, I will be giving you though, Christopher, the strategies that I use to identify these coins, and also the narratives that these coins are located underneath. And maybe I share them in like a hinty way. Like if you guys remember Alex Becker, what he would do last cycle is he wouldn't say buy Vulcan Forged. He would slip in little hints that he was buying Vulcan Forged. Little hints. And you have to be smart to work it out. But if you were paying attention to the shows, you could work it out. Maybe I could do a similar thing. Is EWT still developing? Energy Web Token. I'm not that clued up. I'm not that in the know with EWT. Sort of project that's in my short-term purview in terms of research, but it's one that I understand the use case for. Energy tokens. Just think about the corporate social responsibility, the CSR right now of institutions, and also like minor funds. A lot of funds, it's hard for them to buy Bitcoin. A lot of funds, it's hard for them to buy assets, like proof of work assets. And this is because the environmental responsibility aspect now of investing is higher than ever. So when I view something like EWT, I'm not saying this in particular, but tokens in this environmental niche that are helping with energy efficiency, as well as reducing environmental cost. I do think it's a strong narrative because that appeals to a lot of the individuals, institutions, funds that are more focused towards CSR requirements, which most are basically these days. So I do think this narrative will run at some point, to be honest. I don't own Energy Web Token. I don't necessarily know that much about the token itself. I just understand the niche. So maybe it's one that I look into more. But yeah, niche, big tick, tokenomics. I'm not going to lie to you and say I'm an expert on the tokenomics, and I'm not, but it does look cool. So, but they are still developing as far as I'm concerned. I've seen a few updates, which is why they kind of rang a bell in my mind when you said EWT. All right, cool, guys. Well, hope you enjoyed the show. I'll be back tomorrow for one last show of the week before Christmas. By the way, if I don't see you before then, hope everyone has an amazing Christmas. Enjoys time with their family. Probably going to take the weekend off. I think it's important to do that for a couple of days over Christmas, spend time with family, and just kind of relax a bit. I'll be back on Monday though, and I'll also be streaming tomorrow to kind of maybe do a little Christmas update, maybe do some giveaways. I don't know. I need to work out if I do a Christmas special or something, but I'll be here tomorrow, and yeah, for the ones that I don't see, have an amazing weekend, and cool. I will see you guys in the next one. Peace out.